Day traders are another type of trader that makes short-term trades. But instead of taking a bunch of trades each day traders just take one trade a day and close it out when the day is over. What these traders do is pick a side at the beginning of the day, so to either buy or sell, and they close their trade at the end of each day in a profit or in a loss. They never hold their trades overnight. Day trading is for traders that are able to analyze and monitor their trade throughout the day. So if scalping seemed like it might be too fast-paced for you, day trading might be for you then. However, swing trading, which we'll go into next, is even slower. But continuing on with day trading, how can you know if you're a day trader? Well, first of all, you definitely need to like beginning and ending a trade within one day. You also have to have time at the beginning of each day to analyze the markets and time throughout the day to be able to monitor the trade. And then you also need to be okay with closing your trade at the end of each day, whether it's in a loss or profit. So you may not be a day trader if you like shorter or longer term trading. If you don't have time to analyze the market in the morning and monitor the trade once in a while throughout the day, then this may not be for you. You may have a day job, and most of you probably do have a day job. So if you're able to monitor it once in a while, take a break at work and monitor the trade, then that would work. But if you have to be away for 8 to 12 hours straight, this may not be for you. It might just stress you out not knowing how your trade is doing. If you think you might be a day trader, then here are a few tips as you start. First of all, it is important that you stay on top of the latest fundamental events to help you choose the direction you want to trade at the beginning of each day. Second, make sure you have time to monitor your trade. Like I said, if you have time between your work to check on your trade, then you can make it work. Just don't get fired. And last of all, I want to go over the different types of trading techniques with day trading. They are trend trading, counter trading, and breakout trading. So let's start with trend trading. Trend trading is when you look at a longer time frame and determine an overall trend. So for example, here on the 4-hour chart of GBP JPY, you can see it's in an obvious downtrend currently. Then once you establish this overall trend, so in this case the downtrend, you move to a smaller time frame chart and look for trading opportunities in the direction of that trend. So of course here you would only take short trades, or you would only sell because it was in a downtrend on the larger time frame. So what are we doing here? We're doing exactly what you learned in a different module. We're using multiple time frame analysis. Make sure you use other indicators on the shorter time frame that'll give you an idea of a good time to enter. Next, we have counter trend day trading. This is similar to trend trading, except that once you determine the overall trend, you look for trades in the opposite direction. The goal with this is to get in at the end of a trend when the trend reverses. Obviously, it's a little riskier, but it can have a big payoff. For example, to do this, you may look at the 4-hour chart like we have here of GBP JPY and see that a downtrend looks exhausted. You can tell that it might be exhausted because the stochastic indicator is showing oversold conditions. Then what you would do is move down to a smaller time frame, such as the 15-minute chart, and look for an opportunity to get in a trade in the opposite direction of the trend, which in this case would be up or a buy since the market was trending down before. So you're going to take the opposite and take a trade going up. The goal is to catch the trend early. So you can see here that had you caught the trend right there, you would have caught a lot of profit on the way up. And on this smaller time frame, you could have taken multiple buy trades or counter trend trades and capitalized on that entire move up on that reversal. Finally, we have breakout trading. And breakout trading is when you look at the range a pair has made during certain hours of the day, and then you place an order on both sides of the range, hoping for it to break out in either direction. This may remind you of the straddle strategy that we talked about in the module on trading the news. This method can be very effective when a pair has been in a tight range for a while because it indicates a big move is about to happen. But your goal is to set yourself up so that when that big move does happen, you catch the wave, whether it's up or down. So what you might do at the beginning of the day as a day trader is look at the hourly chart and look at the last 12 or 24 candles or whatever you want to look at and see what the range is of those candles. Then what you could do is place a buy stop and a sell stop. So depending on what happens throughout the day, whether the market moves up or down, it would trigger one of your two trades and then hopefully would keep going in that same direction. And by the end of the day, you'd be able to close your trade in profit. So you can try any of these different strategies that you want to day trade. Go ahead and try this out and see if it's for you. And good luck with that. So now we're going to move on to the next section where we're going to talk about swing traders.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.